Welcome to another daily recap. Today is Tuesday, January 9, 2024. It is about 15 minutes before the market opens, 9:15 Eastern. Currently, while this video is being made, there are 6 levels that have been calculated, identified, put on the chart to trade against today. And after the market closes this afternoon, we'll circle back around and take a look at how any trades played out based on these levels. The market is closed for the day, and it was an interesting day. Another grind up for the most part, the morning mostly, but the spiders lost most of their momentum in the afternoon and they stalled out at a level we had calculated before the market opened. It was the only level we had on the board that the spiders hit, and although the level did work as designed and a trade there would have been profitable, I was not in the trade myself. I'll explain in a moment. Here is a closer view with the levels adjusted accordingly. The spiders opened with a gap down from yesterday's close, and like yesterday, they gave the appearance that they were going to come down further and hit the first level, 470.90 in this case. And I was ready to go long there with a pending order activated in the E-minis, but as you can see, they came up short and started their morning grind from there, so no dice. I did not get on the train at this stop, so I started looking for the next level that the spiders might get to. There were no other levels near this one to the north other than the 470-455, so the spiders had a decent trek until they reached it. I did have an order keyed in the system to go short with E-minis if the spiders hit 470-455, assuming they got there in a more or less straight line. But they stalled out starting around 12 noon and then made another one of these consolidation patterns under the level like yesterday. This little spike here at 12:38 did not happen here or in the ES chart in real time. It was just an anomaly in the chart. But like yesterday, I wasn't interested in chancing this level for a short after they hung out under it for so long. All told, it was about an hour that the spiders spent under this level before they made a move. And I had canceled my pending short order somewhere in the middle of all this. I did see other levels above this that did have importance, but like the similar scenario from yesterday, these additional levels were not as a result of my usual methods from calculating them, otherwise they would have been on the chart this morning. As the spiders were hanging out in this area below the level, I thought I would launch a sim account I have and key in the order in that account just to see what would happen. For me, it was pretty much a coin flip whether the spiders would react from this level enough, so I didn't want to put real money on the trade. Plus, I like doing this occasionally with iffy trades like this just as practice. As you can see, the spiders did finally hit the level at right after 1 p.m. and they pulled back, so it was a good trade. And I actually recorded the trade in real time in the sim account, which is something I think I'll start doing going forward, whenever it's feasible. I'll bring up that recording now. This clip has been sped up because if I were to show the trade developing and playing out in real time, it would take over 10 minutes. But sped up, it's only about a minute long. So at this point, there was a trigger activation in the system in my trading account to sell 4 E-mini contracts if the spiders touched 474.55, which, as you probably know, includes the requisite 5-cent buffer. Again, I'm showing you how you would treat this level normally without regard to the bullish consolidation that was developing under the level. I really didn't expect this trade to work out here, but it's trader's choice whether you want to trade at every level or not. So you'll see the spiders hit the level and the market order in the E-minis is activated at the same time. At that point, I used the chart trading tool in my platform to simply add the limit order in the E-mini chart to buy back the 4 contracts at the base hit profit target of 4 points from where the E-mini order was triggered. With 4 ES contracts, that equates to $800. And I adjusted the charts a little to get a better view. I also added the red line above the level in the SPY chart, so I would have a baseline to gauge if or when this trade might turn into a fumble. And by the way, the dashed lines on the SPY chart are the other levels that I saw based on other timeframes and indicators that I mentioned earlier. So the trade was out of the money for a few minutes, as you saw, but they never got to the fumble threshold, let alone close any candles above it. So this trade worked, as you can see. The ES came down more than enough to satisfy the base hit requirement, and they kept falling lower, even though by that point I was out of the trade and looking for the next opportunity, at least in the sim count. As you already saw the SPY chart of the entire day, no other levels were hit. So we'll look at the tracking log now to bring this full circle. While the one level that was hit did work and would have produced a solid base hit, I am not including the trade here in this log because I did not take the trade myself per the rules. But that's it for today. If you find this information interesting or helpful, I'd like to hear about it. Leave a comment or question or complaint or whatever, and let me know what your thoughts are on this trading strategy. And please like and subscribe if you're so inclined. That would help these videos get traction. Thanks and have a great day.